What's up, fam? Let's talk a little bit about the state of the market. I'm very excited to do this video. I have a lot of passion for this topic. I've studied it for a long time, and it's what actually got me into investing in the first place. I'm going to start out with the NASDAQ composite index. Evidently more significant than Dow. Well, that's my opinion anyways. NASDAQ consists of like 3,000 companies, where the Dow only consists of like 30 between New York Stock Exchange and NASDAQ. Dow is also only really just an index. It kind of gives us an idea of how the market's doing. I'll give you kind of what I'm seeing fixing happen with Dow and S&P, but I really want to just break down the NASDAQ chart to give you an understanding of why I'm seeing what it is that I'm seeing. This can also be applied to the other two. There's just not as much significance in it, in my opinion. So I'm only going to break it down on this one. You can see from this first wave structure right here, we pulled a fib from it, we reached out full extension. It also happened from the end of that extension, we reached out full extension yet again. It also happened here and here. And here, and also here. I purposefully skipped these two. I'm going to go back to them now. If we pull just off of this wave structure, just this top, the first correction, you see we reached out full extension, had a minor correction, now we're still going on. Pulling it from here after that correction, you can see we're right near that 4.236 full extension. If you skip this correction here and encompass the entire correction structure, you can see we're nearing 4.236. It leaves us from current levels about 38% left to go. From its high, you're looking at about 28% left to go. Alright, let's take these off. Now I do believe between 18 and 20,000 we're going to get our top for this NASDAQ chart. That's when the big correction is going to take place. We might see a couple little ones just to kind of stall it for a minute, and I'll get to why I think that in just a second. But my reasoning between 18 and 20,000 is, you can see on the last major correction that we had, it takes us up to the 4.236. Also pulling one from here, you can see full extension gets you out to that $20,000 mark. What's interesting to me is the fact that at this full extension here, using this fib, it takes you straight 3.618. Almost an exact dollar amount. So I think we're going to have a little bit of resistance here, a slight pullback, 5 to 10%. We're probably going to have some resistance here, maybe a little bit more since they line up so well. I'm thinking probably 15%. I'm getting these percentages, from the chart. I've already went through and I've kind of measured the retracements depending on where we was against these Fibonacci's when we had our retracements, and these are kind of the averages that we're getting. I think if we reach all the way up here to this $20,000 mark, we're looking at probably anywhere from a 25 to about a 40% retracement on that. I'll show you kind of what that looks like. If we hit that $20,000 mark and we have a 20% retracement here, so it hits right on that 3.618. If we have more like a 40% right there at that 2.618 or the 1.618, those really line up well too. So I think that's kind of where we're going to retrace to at the least. I feel like there is a lot more to be involved. I think we're going to have a serious crash at some point, but it's just not going to be now. A lot of people are talking about this terrible crash. Just on the COVID crash, we only had a 30% retracement on that, and that's really not anything. I expect to have at least that when we reach this top up here, and that's just from a normal structure. We had this all-time high right here, and we never back tested that. we fought it as resistance here. You can see that pretty clear, but it was never back tested as support. I feel like it's gonna have to do that. I mean, if y'all been following me, you know how big I am on those back tests, and evidently that was a big level of resistance right there. I mean, that high took place in February of 2000, and we didn't break through it till November of 2016. That's almost 7 years it took just to retest that all-time high, and it never back tested that support. Chances are that's going to happen. I don't see it, like I said, I don't see it happening right now, but I think that's by design. This is something that I can talk about for a long time. I mean, I could talk for days about this kind of stuff. There will be a great reset. A lot of people talk about the great reset, but I think that they're just a little bit ahead of their pace right now. I think that's still going to be another 4 years, based off of how long. I mean, this is a weekly chart, so based off of how long it takes for the NASDAQ chart to move these percentages, I'm projecting probably another 4 years, which is kind of crazy to me, considering that falls in line with the next election. Everybody hated Donald Trump. I'm not saying I'm for him or against him. Politics is not something I really want to talk about on here. But everybody was against Donald Trump. Donald Trump was the worst president in the history of the United States. That was what the media was all about. It did not matter. Well, now Joe Biden's in office. Joe Biden is going to be the savior no matter what happens, just because Donald Trump was in the office before him. So I feel like that crash is going to happen maybe right before the end of his term. Maybe he gets reelected again. I do think it's going to happen with Joe Biden. Joe Biden has brought in so many crypto-friendly people into office, and I think that's for a reason. So we look back, we can look at the M2 money charts, right? The M2 money chart, it's absolutely crazy. Let me get this off of here. I should have already had that hidden. This right here was when COVID started. And you see the whole history. Let me get it on auto. So you see the whole history of this chart and how much of a just solid line that it is. And then all of a sudden COVID hits. And look at this. Alright, so this is to its high 25% increase. So how long, let me stretch this out a little bit so we can see it pretty good. How long before that date did it take? Oh man, that isn't even, I'm gonna have to do that one again because that ain't even in the room. Ain't that crazy? So let me stretch it on that a little bit. Alright, so at 26%. From where COVID hit to where that touched again. Alright, so how long? So that shows 30. How long did that take for it to play out? We can pull a date range from where it broke into that level to where it broke out at that level. So it took 281 weeks, because this is a weekly chart. 1,967 days to run that amount. And then it took us how long after COVID? So we, right there where we pull it to current, this is actually only ends in February, of 49 bars. 49 bars to 281 bars for the same percentages. And that is absolutely crazy. So the M2 charts and the M1 chart, if you don't know what those are, just look them up. I'm trying to save time and not really kind of go into all of that. But they were both continued back in February. And that's kind of strange because why would they discontinue these two, in my opinion, important charts? And well, they also did that one time before. Just so happened to be December 2006. Now, December 2007, the Fed stopped all liquidity. There's a lot that happened in 2007. 2008 was the housing market crash, and 2007 it really started. Here's this article here, just a whole timeline of all this revolving around the M2 and M1 being discontinued and the Fed stopping their liquidity. I'm gonna have a link to this website in the description if you want to check it out. There's a lot of useful information in here, I think. But it's also kind of weird to me that they're talking about this, right? And it's about the interest rates and help for homeowners and so on and so forth. Well, ain't we getting that now with stimulus? And now all of a sudden the M1 and M2 is discontinued? Kind of crazy to me. So if the last time that happened, the only time that I know that happened was in December 2006. Fed stopped liquidity in 2007. Then we had this stock market crash of 2008. So it's 2021 now, and it got discontinued. Maybe it's going to be 2022, Fed stops liquidity, and maybe it's going to be 2023. We have the big stock market crash, which would be within Biden's term, and make him this hero. Since here it is right here, President Donald Trump. This is zero. That's just the media. They absolutely hated Donald Trump, whether they had the right to or not. But it just, no president in history faced the adversity that Donald Trump did when it comes to the media. Every single day was a battle with the media, when obviously the president has a lot on his plate. To add that to it, sure, the dude was somewhat crazy. Maybe that had a lot to do with it. I'm not going to bat for him. I'm not going to keep talking about politics. But so what happened in 2008 to kind of get through this? Barack Obama sends out the stimulus. Everything kind of starts going back right again. Just a lot of weird coincidence between the two. So why are they okay with this right here? Because think about how much money it cost them to send their $4 trillion annual budget, whatever it is. How much do you think it cost them just to send this money around, just to utilize the money that they have available to them? And it cost them millions or billions of dollars, probably at least millions, just to send the money that they're going to use for the year, cross borders or what have you. What if there was a case where they could do that practically instantaneous and for a fraction of a cent? Well, that would recover a lot of this. So where's the value of the dollar? Look at the dollar currency index. It's a phenomenal looking chart. This, like I said, selling weekly. You can get a lot better picture from the daily chart. There's a couple things that that I want to point out. The fact that right here we had really it was like a triple bottom, and a huge rally. And then all of a sudden, that's more, in my opinion, that's more of a double top than it is a double bottom. And if there was to have a double bottom, obviously this would make sense. But to me, that's a double top, and well, it wasn't there. Now, it should have been retraced at least this distance here, to measure that double top. You take your peak to your neckline, and you just copy it. So that should have retraced all the way down to this 58 mark. It didn't do that. Maybe I'm wrong, maybe I'm not looking at that right, but that was interesting to me. You can put it on this daily chart, and you can see that And there's a lot going on here, but what I'm looking at here is the dollar's probably going to recover pretty soon. Just based off of these Fibonacci's, it's already kind of cut back over that 236. Our recent posts have kind of shown what the 236 will do, and when you clear that level, and you're probably looking at a retracement up to at least this point here. If it can't clear that, then it's going to come on back down again. What kind of structure do we have here? We've got 1, 2, 3, 4, 5 wave structure. So maybe we'll have A, B, C correction, right? Elliott wave theory. I think that it's probably going to break this, and that's just putting false hope in the dollar. There's going to be a day the dollar goes away. I don't know when that's going to be. I do expect to experience that in my lifetime. I don't know if it's going to be right around the corner. I don't think they're ready for the US dollar to go away, so they're going to put some false hopes into it. You're going to have to see kind of how that goes, how it plays out. Like I was saying, so I already pulled this up. We've measured kind of where I gotta put that on the weekly. We've kind of measured where it is we're at on this, as far as how close to the top we are. This right here, so NASDAQ is a little bit different just because of its significance. But even ISO from current levels to the top here, you're looking at 40% left, possibly. Over to the Dow Jones, and you've got, and I do that every time. So you see, just click on Fibonacci. So from current levels to the top, you're looking at about 18%. On the S&P 500, you kind of see the same thing every time, every single time. From current levels to the top, about 14%. And that's just my opinion on what the top's going to be, just based off of previous structures. It's because of Biden's crypto cabinet that he brought in. Everybody's pro crypto. It seems like I think that's going to be the future. I'm sure we have a digital dollar now, but it's going to be a more effective, more protected digital dollar, so to speak, currency. That's going to replace the US dollar. The reason I say Biden is going to be the hero, is going to be during his term, is just because of the fact that he did bring in that full crypto cabinet. All of them seem to be pro crypto. Gary Gensler is a whiz teaching at MIT, coming in as the new SEC chairman after that joke of Jay Clayton. Obviously more people than that, and that's the most significant. And that's going to be what recovers all this debt, and that's what's going to make him be a hero. So I'm about to start wrapping this up. Let's just look at one more thing real fast. I just kind of want to give you an idea, if it's actually coming back to retest this level here. We're looking at, from this top and all the way down, 71% correction. And could you imagine that and what that's going to do? But what happened right here in 2000? How big of a correction was that? And that was a full look. Fibonacci every time. It's just muscle memory. I'm just going to go in there and I'm going to click on Fibonacci. So you pull that down, and there was 77%, 71%. It all kind of just adds up to me. I really think that's going to be the top there. I really think this is where it's going to come correct to. I think it's going to be at this moment that we go ahead and switch over to crypto. The country as a whole is not ready for it yet, but they're trying to place themselves in a position where they will be ready, and they're going to buy themselves as much time as they can with printing this extra money and supporting the economy, quote unquote, and the stimulus and homeowner relief and negative interest rates and all that kind of stuff. It's the exact same narrative that we've seen in 2007 and 2008, and caused a That crash was 60%. This is going to be what it is. In my opinion, this isn't financial or investment advice. It's just my opinion on what it's going to be. And then it's going to be Joe Biden and cryptocurrency that comes back and saves it. Well, I'm going to go ahead and wrap it up here. If you like this video and found it helpful, please hit the thumbs up button. Join us over at the Reddit page to talk about this a little more. If you have any questions or want to share your opinion, I'd sure love to hear it. But remember, I'm not a financial advisor, and this is in no way investment advice. But whether good or bad, I'll be here sharing my intentions with full transparency until the end. Good luck.